Hey, everybody, we just got earnings from Berkshire Hathaway, who annoyingly always decides to report their earnings on a Saturday. It's the one Saturday every 3 months that I have to tell my wife and kids, don't talk to Daddy until I, digested Berkshire's earnings. But here
That's
we
how we
are.
know Matt is a grinder, everybody. Matt is a grinder.
Oh,
He wakes up on Saturday and reads the Buffett 10Q.
I volunteer each quarter to be the one who covers it on Saturday morning. I don't know why I do that to myself, but the whole reason that Berkshire does that, by the way, is so you don't have to worry about it on the weekend. It's so you have time to digest the numbers well before the market opens again, and no one has to scramble to know the numbers. Nothing's going to happen. The stock's not moving. But before we dive into Berkshire, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. So let me just share my screen real quick. Hopefully you'll be able to see this. All right, so this is Berkshire Hathaway's earnings release right here. And the first page of the earnings release is pretty meaningless. So Buffett himself will tell you, and that's what this whole paragraph under it tells you, is that Berkshire's headline earnings number in terms of just net income or earnings per share includes the unrealized losses or gains from its stock portfolio. So at first glance, Berkshire went from a $5.88 per share loss a year ago to a profit of $12.18 this year. That's not true. That just means the stock market had a better quarter in the third quarter of 2024 than 2023. It's not how the company's actual businesses are doing. It's not that they sold stocks at a profit or loss. It's just an accounting rule. So the real numbers to pay attention to in terms of the business are on this second page, which is Berkshire Hathaway's operating earnings. Let me zoom in on that just a little bit more. So here's Berkshire's operating businesses, and these are generally pretty predictable with the exception of insurance, which I'll talk about in just a second. But you can see right here, the railroad business had a nice little earnings increase. The energy company had a very nice earnings increase. It was just a really good environment for energies right now. Other controlled businesses include probably about 50 different things. That's Duracell, See's Candies. I don't know. The list goes on. I'm not going to read them all. Those had a pretty, we're down slightly year over year. Insurance took a big hit on underwriting. Pretty much there was just a higher amount of natural disasters in the third quarter of this year than there was last year. That, Berkshire owns Geico. A lot more people got cars flooded in hurricanes, things like that. Investment income from the insurance business was significantly higher. That's a function of the interest rate environment and just how much kind of interest earning assets are being held in the insurance business. We mentioned, or we're going to mention about Berkshire's cash. This is, interest income that it's getting from that cash. So the biggest thing to pay attention to in Berkshire's earnings report every quarter is not its operating income, although the operating earnings are interesting to watch. Year-over-year decline of about 7% in operating income from its 60-plus subsidiary businesses. But again, a lot of that's due to the underwriting in the insurance business and things like that. So not terribly important right there. The biggest two things to pay attention to this quarter anyway are Berkshire's cash stockpile, which swelled to a record high $325 billion. I had million written on my note sheet just because that's just my instinct to write. 325 billion is a very, very big number that doesn't come up very often. Even when Apple had a kind of massive, remember, Tyler, when Apple had a ton of cash that it couldn't move from overseas, it never even reached that kind of level back when they couldn't repatriate all their cash. And maybe even more significantly, the reasons for that cash stockpile rising so high are, one, that $10 billion of operating earnings that I just showed you on the screen. That's one reason. Two is that Berkshire's been selling stocks kind of hand over fist, particularly its two largest positions, Apple and Bank of America, which Bank of America is not the second largest position anymore after these sales. And number three, this is the first quarter in several years where Berkshire spent no money at all on stock buybacks. Now, a lot of investors say that that's sending a signal to the market that Warren Buffett is scared of stocks. Maybe he just wanted to kind of, raise some capital, whatever. We don't know why he's doing all this stuff. But Tyler, two questions. One, what signals are you taking from Berkshire's earnings? And if you had $325 billion in your back pocket, assuming you had very large back pockets, what would you do with it?
Well, I think there's a lot of, look, with a lack of commentary typically from Berkshire Hathaway outside of the annual meeting or the annual letter, it kind of gives market commentators or stock commentators like us kind of carte blanche to do whatever we want. And of course, getting clicks, a great way to do that is to say that Buffett thinks stocks are overvalued and sell everything and, turtle up and go to cash. But look, it could also just be the most benign thing, which is like, I don't see a lot of investment opportunities right now, or maybe I'm getting ready to make a large one. One of the things that Buffett has been saying for a long time in the past couple of years in his annual letters is that it is hard for Berkshire Hathaway to make a needle moving investment. I think for a good example, this year they acquired the outstanding 50% of Pilot Travel Centers, which is a gas stations that specialize for long haul trucking, right? I think it was like a $9 billion transaction just to close out its remaining position. It doesn't even show up in the operating margin. So this is an $18 billion company that just kind of like gets thrown in the other. Now, any other business that buys $18 billion worth of something, it's going to be a big thing. It's like, I'll throw it back in the couch because it's such a meaningless amount of change. And so there's part of me that wants to say, look, this is either some sort of getting ready to make that needle at moving acquisition and put that capital to work, or maybe there's also just a succession planning, clearing the deck and giving the new management, when you hand it over to Greg Abel, Todd Combs, Ted Weschler, Ajit Jain, they've just got much more of a blank canvas to work with and make Berkshire a little bit more in their, handing it over to the new general contractors, I guess, if you will, using last year's shareholder letter kind of parlance. And so, I don't necessarily believe it's everything's overvalued. Maybe you could say that about the stuff that's large enough that he can buy. And, maybe Berkshire Hathaway stock is just not discounted enough that he felt absolutely compelled to do it at this moment. So, I guess I would say it's kind of a avoiding hyperbole kind of moment for me. And typically when it comes to stuff like this, the answer ends up being the most benign of all of them.
Yeah, I would agree. Take it with a big grain of salt. If anything, I view it as a reason to buy Berkshire Hathaway. I think it gives them a big competitive advantage if stocks don't do that well. In the meantime, treasuries are still paying a lot. It's really important to note. Most of that isn't just sitting in cash like in a giant bin of money somewhere. It's invested in short-term treasuries. They're still paying close to 5%. So Buffett's still making, probably $14-15 billion of annual interest income off of its cash. And that's really not, it gives you less motivation to really hurry and find something to do with it. When you can just kind of get paid like that just for maintaining financial flexibility. And this is an unprecedented level of flexibility. They could buy companies that no one else could. So I'm not worried. I'm not heading for the exits yet. Berkshire's on my buy list, and its position on my buy list has not changed as a result of this news. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.